Hey guys, I'm Steve Ludwig, the insurance man, and I wanted to talk to you guys about a few tips for saving money on your insurance. So, what I like to do is call this the deductible savings plan. And this is the house versus the customer. So, insurance companies are going to use a specific algorithm, and each insurance company does it. Majority of these insurance companies are 2 years, some go as much as 3 or 5 years. It really just depends. But that's why insurance companies say to us when we're going for insurance, well, have you had any accidents or tickets in the past 2 or 3 years? The reason why they're doing that is because they use that algorithm to predict when, almost down to the minute. It's almost scary like how they can get so close. But it's a gamble. So obviously insurance is essentially the insurance betting that you'll pay them money and that they'll never have to end up paying out on a claim. So they can be able to use that algorithm to try to be able to make you pay the most amount of money rather than obviously the least amount of money. So what we've done is we've come up with this system that we use for our clients to try to be able to stump that system. There's a way of essentially getting ahead to making sure that you always stay in the driver's seat of your insurance policy. So here's what we do on here, right? So the monthly premium that you're looking at originally, I'm just using these as general numbers on here, right? So $280 a month, right? This is month 1 through 6 on here. If you take the $1,000, we add in a gap insurance plan or deductible reimbursement. What that does is it kicks in $1,000 if you have any type of collision or any type of comprehensive claim that ends up happening. So we kick this in, and we lower that down. Your original monthly was that, now it's at $180. So obviously now you have the $25, and the gap is what that costs on a monthly basis, a secondary insurance product. And then your savings is going to be $75. So you take this $75, and rather than give this to the insurance company, what you're going to do is you're going to stick this over into a fund. So originally I start recommending people to put this over into a high interest bearing checking account or a savings account or a money market account, something that you can be able to access if you needed to without really taking any kind of major penalties. Then we'll get into the more fancy stuff here later of how you can actually transpire that into helping you with savings later on down the road, because we all want to save money, right? So the insurance companies, what they're trying to be able to do is they want you to pay the lowest amount of deductible is obviously going to cost you the most amount of money. So their trick is to be able to get you to pay more money to them, thinking that you'll end up having to pay out a little bit less, when you end up getting into an accident. Well, so again, we stump them on this and we beat them at their own game. So what we want to do is we put this over into this fund, right? So this is going to be your real deductible. We'll start out with $2,000 and we'll start getting up into $2,500. But you have where months 1 through 6, your true deductible is $2,000, right? Okay. But after you incorporate your gap insurance, you're going to have where your deductible is actually only at $1,000. So now fast forward this as you're starting to, you have to look at when's the last time that you've really had an accident? Some of you might say well, I haven't had one in 20 years. Well, guess what? You're paying all that money to the insurance company rather than putting it back into your pocket. And your agent's not helping you to put that back into their pocket. So shame on them for not showing you the different ways to be able to help you, to save you, to put you into a better vehicle overall. So that's what we do for our customers. So if we fast forward down here into 12 and 18 months, you start seeing it's the same things, but you're now starting to climb on your deductible. You have $2,000 and you go up to $2,500 and $3,000 and through $3,000 and $4,000 and all the way up to $4,500, which I'll get to in a minute. But you're starting to see this fund that's starting to incorporate savings in here for you, right? This is money that's going back into your pocket that you're not giving to the insurance company. In the event that you have an accident, well, guess what? This is what your actual deductible is, right? You were cool with having a $1,000 deductible. This is what your actual deductible is of what you would actually pay out. And as you start seeing on through here, this is 2 years. You were cool with having a $1,000 deductible to begin with. This starts getting down into $680, and you might look at it and say, okay, $500 deductible, I'm cool with that. You have this money that's set aside, and this money continues to keep growing. After 24 months, this is essentially when you need to make the turn, okay? Because at that point, what you want to do is you want to have your agent go through and shop a policy. Hey, I just hit on a major thing. Work with a broker, not a captive agent, because they have nowhere to take you. They have nothing to help you out with past those things. So are they doing what's in your best interest? No, they're not. They're doing what's in their best pocket interest. That's what they're doing for you. So what we do, we shop you with another company. And then we reset and we go right back to the beginning. But this time, you got $2,800 in your pocket, right? So now you can afford to go back to the same original fund on here, and you could just go back and you rinse and repeat. So what happens with that is you continuously keep beating the insurance company. Even if you paid out something, you're still ahead. You still make money on that. Are you going to have insurance? Yeah, absolutely. You're going to have insurance. And here's the other thing as well too. Some of you might be saying, well, what about my lien holder? They won't let me have any higher than $1,000 or $500. Well, guess what? Show them the escrow fund. You'll say that that's dedicated to it. They can assign that fund that in the event that you're in an accident or you have a loss of some sort, that will pay out, and they're guaranteed that they're going to get their money. And that is essentially a surety bond for the insurance company. So again, recapping on here, right? Insurance companies, you want to shop it every 2 years. This isn't 1980, guys. This isn't when you're sitting down with your good neighbor or good hands or whatever good that they're talking to you now about, or whatever. They don't give a crap about you after they've paid out on some kind of a claim. And let me tell you something as well too. Once you've reached a certain level of time with these companies, guess what? They pretend like they don't even know you. If you have any kind of little claim and they figure out, hey, they're on pace to hit this algorithm, you're dead to them. They don't care. That's how insurance companies work. I hate to say it, but that's just the way that it is. It's a cold-hearted world that we live in, but this is a different day and age. There's a lot more accidents. There's a lot more risks. There's obviously, like back in the 80s, the 70s, 60s, whatever, we weren't texting and driving. We didn't have all this stuff going on with our phones. We didn't end up having all these extra, activities that were going on around us where we're not focusing really on driving. You have automatic driving cars that are coming through and everything, and that's all these type of things all play into that whole risk category, right? So right now we do that. We only use that with the auto. We're looking to try and be able to do that with the home. We have not quite figured out how to be able to do that as of yet, but we are looking at how we're going to be able to do that. But for sure, the auto, to be able to sit there and to be able to put a couple $1,000s in your pocket, are you mad at us because we shopped your policy? We truly got you a good rate. Let me ask you something. The insurance company, if you go through, you have a claim, and they pay out, what difference does it matter if it says Allstate or if it says Progressive on there? It doesn't matter what is on those policies. As long as they pay out, you're paying for insurance to take care of in the event that you get into an accident or you have a claim of some sort, that you essentially have that money to be able to pay out to the other person that was involved. So again, we go through, we look at these different companies, we work specifically directly with their underwriters to be able to get you the best possible deal. We'll make them fight for your business, and we'll make sure that you continuously stay in the driver's seat. We also want to make sure that you get the top-notch customer service. We assign a different agent to a licensed agent that will be able to go through. They're a customer book manager. They know exactly what's going on with your policy. So if your agent, your main agent, is not directly available, that person is. And they'll be able to go through, they'll be able to know exactly what's going on in your policy, and they'll be able to answer questions. We also have a customer service person that's available, not an answering machine, not a prompts or anything like that, an actual person that you can talk to. And if you need it in Spanish, guess what? We have the Rosetta Stone version as well too. We can be able to get you, we have many bilingual agents that can be able to help you to be able to make sure, again, you stay in the driver's seat, put this money back in your pocket, and be ready to go.